Morning everyone, this is Mike Hamilton from Trade the Easy Way, and I'm going to show you what I'm seeing in the markets overall. Just give you the heads up on the overall picture. I've chosen to start with the Russell Index, the small cap US index, and we spent all of this year in this big box from 2088 to 2358 roughly, give or take a few pips. And all we've done at the moment is, since non-farm payroll last Friday, US monthly jobs, we've dipped back into this 20-day average. I like the 20-day average because I think it's a good indication of the overall trend line. I was always taught that the 50-day average was the mother of all moving averages, but I quite like the sort of the trend flow that you can see in a 20-day average. And apart from this short period here in July-August, we have pushed up through the 20 and come back through it. So we're sitting sort of midpoint. Now in a box play, this is the decision maker. We're in the middle of this range. I think we can hold. So if we do hold here and push up, I think that bodes well for the rest of the market. Other indicators, other proxies are, let's have a look at China. See, China's reversed in my book. So huge three-wave correction, and now we've seen an impulse and potential and pullback, double bottom, and we are potentially going to wind up. Now that analysis is going to be wrong, or at least suspect, if we close back under this 14,900. If we come back and kiss this trend line and hold it, then the next step is 16,000, and who knows, we may be able to creep back up. And last but not least, I'm going to show you the S&P Transport Index. And this has been steadily pushing up. You can see it's a very, very neat trend line. See how the 20-day average has really caught it. This is all daily charts, by the way. It's really very shallow. Turns red for a very brief period. Turns red, very brief period. You can see this 20-day average has really caught it. We're struggling up here at the highs, and all we've done is pull back to the 20-day average. So again, we're right on a key point on the S&P Transport Index. So whichever, in the next couple of days, I think it's going to be really telling. But I think that we are going to march up. Alright, quick look at the Europeans Indices, because so many Europeans are watching this. So we've come out of this pattern. So we had a series of lower, three-wave reversal up here, very subtle, gentle reversal. We held up right into this Monday. And here we are on Thursday morning, just sitting back in this support. So obviously we've been through a bearish period. We pulled back. The main support, well, really, the main support is all the way back down there to July lows at 15,000. If we pull back here, if having rolled over here, or at least pulled back, if all we do is pull back into that resistance, either at 815 roughly, or about just under 16k, if we then subsequently fail there, then we're going to find ourselves potentially down there quite quickly. However, if this holds and we can close above here, then I think we can push up. And this is typical September action. We've got a triple witching on the 17th, end of next week. So we got a day and a half left here, and then back end of next week we've got triple witching where all the contracts and options expire. So you normally, as these contracts change over, you normally see this drag down until the new contracts come into place. And then potential, so we could find ourselves down here in the next week if this fails, if all this support gives way. But my feeling is if the Russell can hold up and the Asian markets can hold up, then I think this dip at the moment is viable. We could, if all we end up doing is getting wiggling around here, then that is potentially bearish. Because if we just made a series of lower highs, then we could roll over. But at the moment, the markets are held up, but we could see deeper pullbacks before this pushes higher. Okay, we may pull, we could pull back into that 15,000. Let's look at the FTSE. Yeah, that's, wow. Of all the indices we've looked at the moment, this is the weakest. We had a lower high up here. We looked all right into back end of last week. We could come all the way down to 6,800. All right, so we've got head and shoulders. Shoulder, head, shoulder. That's the high neckline. This is a lower neckline. And at the moment we are potentially falling back into that 6,800. Volumes, we're not, I think this is the key. If you come down on big volume, then you've got a lot of follow through and you potentially can just keep going. At the moment these volumes are pretty weak, so we are, obviously that's a significant drop, but the volume is, it's early days for today. We're only a couple of hours into the London Open. But overall, these volumes were coming down on fairly low levels of selling. We saw much greater volumes of selling up here in March on this shallow pullback than we did up here. So coming down on low volume is bullish, but at the moment there you are potentially grabbing a falling knife at the moment, because there is no sign of that pulling up after this 3 days of selling. Another point to note is that was only about 5 or 6 days of selling. That was only 2 days of selling, 2 days of selling. So you can see, so we've only got 3 days of selling. So yeah, this line in the sand here at 6,900, 6,950 looks like the next stop now. There was divergence up there in the MACD, so short term bearish. We've not even looked at the other US indices first. Let's look at this Nasdaq has been incredibly strong. Really shallow pullbacks. I tried shorting this a couple of times, and it just doesn't want to. They're not letting it go. Put it that way. Certainly got a problem up here. We are divergent. Volume on the sell side is picking up, and we're disconnected. I think what's happening here in the US is probably what's really going on. We need to see a connection with that 20-day average. Every time this market gets too far away from it, it pulls back. Very slow grind up until you pull back. Okay, so we do. Short term, I can see some further pullbacks. But if these can hold into, as we come out into the second half of September, then I think we could potentially wind up. October is normally volatile as well. We've got all the US and UK furlough schemes finishing. Anyway, quick, let's move on, because I'm taking up a lot of time. Dollar's pushed up and has hit resistance. Now this is key as well. If this shoulder, head, shoulder, if that's a lower high and we come down and don't hold this level here, then this is going to potentially roll over. That bodes well for the markets. Right, let's start looking at things. Gold. Deeper pullback. We've come out of this box that I've got ranged. If we pop back in, that is very bullish. If we find ourselves above 1800 in the next day or two, we've got US inflation early next week. If we find ourselves picking up here, then I can see us going to 1845. If we break this low at 1782, then we're going to see this deep pink area here at 1760, 1770. What do I think is going to happen? At the moment, I think this can hold and we can pop back above 1800. It's very common in commodities. 1800 is the major line in the sand. It's very common in commodities to go under big numbers, shake out some weak hands, and then pop back up and run. Alright, so again, I think today is really, really important. If we just can't hold this 1800 and close lower, then watch out for lower numbers. I am still buying dips at this stage intraday, hold them overnight if they work. So I would still be a buyer of this 1780, 1790. But if you want to hold it intra-week, then you definitely got to get your stop underneath this 1783 and be prepared to get stopped out, because if it is going to reverse, it's certainly not confirmed yet. 3-4 days of weakness, and still in the daily chart, still no sign of that holding unless we can finish today well. Right, stocks. You'll be pleased to hear I've sorted all my watch lists out. I've been watching this Avon. Now we saw some decent volume coming yesterday, and we're pulling back. So this 1776 may be the point we can see a reversal. I'm going to turn my attention to the miners now. This is Jubilee Metals. We've seen a series of lower highs so far. That was just narrowly, so it broke the high and then went sideways again. 3 days pushing into this area here. I'd be concerned because there's just no. We saw obviously great volume. This got chased up. So if this is wave 1, an impulsive wave, then in theory wave 2 could drag it down back to our good old 20-day average. And then if this is a good impulsive wave, then wave 2 should create a wave 3, potentially back into that support. So I think this is good, but I would wait for a pullback into this zone here. I would wait for that to go back potentially to 15.3 before that could. I'll show you what I mean. So if that is the impulse, that's potentially the wave 2. Wave 3 could take you back into 20, and 4 and 5 may take you into 22. So I think, given the volume and that pattern, I think we could fall back into this breakout area from the 24th of August before potentially going up on Jubilee Metals. Let's look at Pan Africans pulled right back on itself. So again, as you've just seen in that pattern I described, that's not unusual. If we need obviously to pop back inside that, otherwise that could come lower. POG, yeah, same story. So it's following gold, isn't it? Gold's spiked up, had a deep pullback. It's a question of whether gold can hold here. So the miners are following suit at the moment. But I think these are good opportunities. I think there is a lot more inflation to come through in the market. The US market, or the Fed Chairman Powell, believes that we've seen a spike in inflation and it will pull back under the 2%. I personally think There's various things going on in the economy which is will continue to push prices up. Right, let's go rattle through the markets. Lloyd's, I like on a pullback. That's a handsome pullback now. So 42 was a key area. We've come underneath that. So if we continue to come lower, the real line in the sand is around that 40 area. Now look, we're coming down on lower volume again. So this does signify, at the moment, unless this accelerates, this does signify that we are simply pulling back into these support areas in what is a traditionally volatile period of the year. So I'm getting very interested in, we're up here at 50. So for Lloyd's to come in to this support, if we subsequently can close above this 43, then this could go back to 50 if we follow this pattern. So again, don't be very careful about buying stocks that are still dropping, because called in the trade catching a falling knife. But I'm getting very interested in this level here, 22nd of April. Very close. That's 41.35. I'm even going to set an alarm on that. I would really love to see Lloyd's just dip that bit further. Barclays, same story. So this is the story across the board now. Airtel pulling back. Volumes tailed off up here. So you may see some deeper pullbacks in that. But of course, you get back above 94, then we could come and find 100 plus. BT is pulling back, which I'm happy about. Oh, blimey. We've really seen 142 today. I'll double check that. But yeah, General put a buy signal in on yesterday, and this is pulling back into this big bar here. It's choppy, but I think this could go. I think this is looking good. The jury's out, because that could still come to 118 and lower. The volumes do not confirm a reversal at the moment. That I'm not happy with that volume. Airlines, yeah, EasyJet have dropped today as they've gone back into the market for funding, and British Airways owners IAG, that looks as if that's coming into 139. That's why I don't like that sector. Right. Nothing, everything otherwise, there's a lot of red on the charts. Even Rolls-Royce is pulling back. So this is what when we talked on Sunday, this is what we saw. This lack of volume, stocks holding up but not going anywhere. So all we're doing is, we're shaking out some weak hands now. If we pull back into these buy zones on these good quality stocks, then they could bode well. IQE, at the moment we're getting a pullback off this decent support. Best time to buy stocks is when the markets are looking shabby, are looking weak, and that's exactly what we've got right now. So if you do go into these stocks, and so, like I said, some of them are coming to very, very interesting price levels, make sure you've got a good risk management. What is your risk profile and your risk management skills? What's in your plan? Just make sure if you are buying these dips that you're aware of where you could be wrong, and where you can be right. Simple as that. So just manage that risk. Don't start steaming at this stage. I think we've got a little bit more mud to tread. May see some deeper pullbacks. That's a significant drop in the FTSE. The FTSE at the moment is the weakest of a lot of the indices. Alright, I hope that helps. Very much looking forward to the Sunday review. Catch up with you then. Bye for now.